Well, a very good morning and good afternoon to everyone, and welcome to our webinar. I'm Craig Martin. I'm chairman of Dynam Capital, and Dynam is the investment manager for Vietnam Holding. Vietnam Holding is a closed-end fund listed on the main board of the London Stock Exchange and owns a high conviction portfolio of listed Vietnamese equities. It's an actively managed fund with our team on the ground in Ho Chi Minh City. And for over a decade, the fund has been a signatory of the United Nations Principles for Responsible Investing. So it's a fund that has ESG integrated in every phase of the investment life. For those of you who aren't familiar with Vietnam, it's a wonderful country. It's a large country, 100 million people almost population, and situated at the confluence of Southeast Asia and Northeast Asia. It's a young population, increasingly digitally connected, highly literate, and has a very stable socio-political regime. That's something you can't take for granted these days in the world. And just early this month, Vietnam commenced its next 5-year journey, the next epoch, the next phase of its Politburo, of the political elections. And the government's really set out a pro-business agenda to look at how Vietnam, over the next 5 to 10 years, can really move along in this journey, becoming a modern industrialized economy, a rising middle-income economy, and also a key part of the global supply chain. And these are themes we'll touch on during the course of today's webinar. Vietnam's also a high-growth economy, and despite COVID, emerged strongly through 2020 with positive GDP growth, attracted record levels of foreign direct investment, and it's a very open economy. Towards the end of last year, Vietnam successfully concluded a number of trade agreements, entered the Regional Comprehensive Economic Partnership, RCEP, initiated the EU Free Trade Agreement with some great success, and also towards the end of the year, entered into a free trade agreement with the UK. Today's webinar will be about 30 minutes or so. We like to keep things short and sweet, and we know your time is very valuable. I'll talk for the first 15 minutes or so, and then my colleagues and Tan will come online for our Q&A, and also to give a little bit more of local color on some of these themes and aspects. There'll be time at the end for Q&A, so feel free to drop the questions in the Q&A tab. You know the drill by now, I'm sure, and we'll try and address those. If we can't get through all of them in the allotted time, we'll make sure we do respond individually to them. So 35 years ago, Vietnam implemented a new set of policies that really transformed the economy, society, and paved way for the development of the country's financial markets. The political system is stable, as we've mentioned, but it's also, Vietnam is a market economy. The people are very entrepreneurial and aspirational. The Vietnamese today believe that they're better off than their parents, and they believe that their children will be better off than them. So there's a fantastic forward-looking aspirational culture. Increasingly, gender equality features in Vietnam. And the Vietnamese are very hardworking. I don't want to embarrass my colleagues, but they're incredibly hardworking. And the Vietnamese have been dubbed the Germans of Southeast Asia for their ability in manufacturing and intricate engineering work. The Vietnamese also highly value education. Teachers are honored annually, and there's a high focus on education. And over the last 3 decades, there's been this start of this virtuous cycle, from starting to trade, attracting foreign direct investment, requiring more industrialization, requiring more infrastructure was put in place, both hard infrastructure and the human capital in terms of the education, opening up of the stock markets, the capital markets a couple of decades ago, creating more capital, more entrepreneurs, more trade, more foreign direct investment, high levels of industrialization, and so on and so forth, a virtuous cycle. Vietnam's enjoyed 30 years of high growth in gross domestic product. In 2020, the economy on that basis is just under $350 billion in size, which is 10 times the amount it was at the turn of the millennium. And we think that within the next 5 years, the economy could be $500 billion. And when we look at Vietnam versus some of its neighbors here in ASEAN, we see that Vietnam was the winner during the pandemic year, with positive GDP growth, just a shade under 3%, whereas the rest of the ASEAN countries were all contracting. Vietnam's also an emerging consumer play. Car ownership over the last 5 years has doubled, but it's still very low. There's only 23 cars per capita in Vietnam versus 205 across ASEAN and 200 across China. So there's much more to come, more traffic. Hopefully that will be EV rather than petrol and gasoline, but remains to be seen. It's also a very fast-growing market for convenience stores. And yet only there's 55,000 people per store in Vietnam, whereas in China, it's 25,000 people per store. And in South Korea, 2,000 people per store. So again, tremendous amount of growth. Even from here, a modern trade is probably around about 25% of total sales, and that could reach 40% by 2025. So it's a dynamic market, creating tremendous opportunities for retailers as well. Vietnam's urbanization rate is currently about 36%, which is where much of Western Europe was at the end of the Second World War. We think Vietnam's urbanization rate will reach somewhere between Thailand and China, where they are today. So probably 10 years or so behind those countries. That increased urbanization will boost domestic consumption. And we can already see that over the last decade, retail sales in Vietnam have grown at a tremendous rate, 11% compound annual growth. And the market's sizable today, north of $200 billion annually. Yet we think it's still at the starting point. It's an inflection point as the country's got to $3,000 GDP per capita. So we think that growth will continue, as happened in Thailand, as happened in China when they reached that milestone. Vietnam is an increasingly important part of the international trade. As I say, the government wants to see it be a key part of the global supply chain. And look at its share of global exports. It's been increasing over the last decade, and in the last 18 months, its share has increased significantly, taking quite a bit of market share from China. As can be seen on the other chart, that Vietnam's exports to the US have gone north of $80 billion. And that's also complemented as this virtuous cycle of more manufacturers looking to relocate or locate into Vietnam for manufacturing for export. So the trade tensions between China and the US, which we imagine will continue under the Biden administration, though they may be better articulated and more clearly articulated, they will still persist. And Vietnam still tends to benefit from this. But it's not only beholden to the US, it's an active exporter globally to China and the rest of Southeast Asia as well. And we see this trend continuing for the foreseeable future. As importantly is the nature of those exports, and Vietnam's value-added exports have increased 17 times over the last 30 years. A change from perhaps the reliance on exporting agricultural goods, rice, fruit, and coffee, which is still very important, and Vietnam's still a massive volume exporter of each of those categories. But over the decades, we've seen a shift and an increase in the value add to high-tech products such as mobile phones, tablets, computers, accessories, all the things we need to stay at home and lockdown and working from home, but also in that replacement IT cycle. And over the next 5 years, well, what next? Vietnam, maybe is going to be an export base for EVs and components in the same way perhaps that Thailand created its hub of excellence in the car industry in the early 90s and in the hard disk drive industry. So Vietnam's able to look at these value-added clusters. It's attracting a great deal of foreign direct investment and has been for many years, particularly perhaps as people look to diversify away from China, this China Plus One strategy. In addition to the kind of technological sectors, predominantly people like Samsung, Intel, LG, and Foxconn, one of the key suppliers to Apple, who have either moved to Vietnam or increased their production, their investment in Vietnam. We're also seeing a very encouraging trend of foreign direct investment in the form of renewable energy. Just a couple of years ago, Vietnam's renewable energy, other than hydropower, was zero or close to zero. Now Vietnam's probably one of the largest renewable energy markets in Southeast Asia, and is attracting a lot of foreign direct investment into renewable energy, also into lower carbon energy such as LNG, and that's a positive trend. Today, some Japanese financiers have announced that they're no longer going to support the financing of coal power in Vietnam. So, we're confident that there is a global shift to a lower carbon footprint, and Vietnam is certainly going to be part of that going forward. A key pillar of this new epoch of the 5 years of the new Politburo and the government is really to accelerate public investment. And over the next 5 years, the Vietnamese authorities look to be likely to mobilize up to $120 billion in public investment. That could be helped by the law on public investment and the implementing sub-decrees, particularly around public-private partnerships or PPP initiatives, enabling both domestic and foreign investors to partner with the government in this domestic infrastructure. And as we know, domestic infrastructure, that expenditure can have a multiplier effect on economic growth. It's happened in several countries around the world, particularly where this is new infrastructure coming in. It's green infrastructure in terms of greenfield infrastructure. And much of this is coming into transport infrastructure. At the beginning of the year, the ground was broken on the new airport, about 45 minutes outside of Ho Chi Minh City, Long Tan Airport. A number of the rail projects are being trialed and tested in Hanoi and also in Ho Chi Minh City. And those programs will be continued to roll out. These are multi-year projects. Yes, often they get delayed. Look at Crossrail in London to see how rail projects can get delayed. And yes, it happens in Vietnam too, not necessarily for the same reasons, but still, these are complex projects. And also the arterial infrastructure, the road infrastructure. For those of you who haven't been to Vietnam, it's a very long, narrow country. It's about 2,000 miles from south to north. About 36 hours by train. Michael Portillo took the train, and I encourage you to do so. It takes a long time to drive, don't drive, but still arterial infrastructure is needed for transporting goods, in addition to the great networks and the river networks and the sea access as well. So this is all positive in terms of the multiplier effect over the next 5 to 10 years for Vietnam and beyond. There's also a transformation opportunity and an acceleration towards this digital economy. It's a young and dynamic population who are enabled by technology. There's more than 1 million people in Vietnam employed in information technology, 80,000 graduates, IT graduates per year. Many businesses in the infotech and in the technology sector. And the government's very supportive of this, both in terms of encouraging good regulatory frameworks for 5G and for the mobile infrastructure that's needed around that, looking at digital government initiatives, and also, from a laissez-faire perspective, allowing the private sector to get involved in the startup ecosystem, in the venture capital and the fintech and the new technologies that are being adopted and created. And that digital economy in Vietnam looks as if it's going to treble in the next 5 years. Gross merchandise value from about 13 billion to 45 billion. And we're seeing lots of innovation in that sector, as we are in the rest of Asia, of course. And Vietnam has a key role to play in that. Some Vietnamese companies now turning their attention globally. They're unicorns in Vietnam, but they want to take on the rest of the world. And you'd be a brave person to bet against them when they do that. So how do you access the opportunity in Vietnam? Well, obviously one way is through the equity markets, the capital markets. They don't capture all the GDP story, but an increasing amount of it, and a significant portion of that. And the growth in the market capitalization has been phenomenal, north of $200 billion across 1,600 public companies. And that's been an incredible rise over the last 20 years. Interestingly, in the last 6 months or so, a lot of this has been fueled by domestic investors. The Vietnamese domestic investor has a high degree of confidence. Vietnamese people are very positive about the future. In several happiness surveys, they're happy people, they're looking to invest, looking for growth. Several 100,000 accounts opened for people to be able to participate in the capital markets. And that's really pushed the liquidity of the market to high levels. So the daily average volume on Vietnam stock market is around about $600 million, which is actually much higher than a number of the countries that are in the Morgan Stanley Emerging Market Index. Remember, Vietnam is still in the Frontier Market Index, yet its characteristics are very conducive to being included in that EM category. That growth doesn't come without any problems. When the daily liquidity goes above 700 million, and one day it went to $1 billion, the stock exchange infrastructure is struggling a little bit. It was meant to be upgraded last year. COVID prevented that being fully upgraded. So there's plans to upgrade and build out stronger, more robust pipeline for that infrastructure during the course of this year. And also there are plans to look at central depositories and to move to T+0 from T+3. And all these are very positive initiatives for the capital markets. They'll see more volume, more liquidity, and gives it a greater chance of the holy grail of being incorporated as an emerging market company properly. So our approach as an equity investor, that's how we want to participate in the growth over the next 5-10 years of Vietnam, is really looking at growth at a reasonable price, both top down and bottom up. The key themes are actually consistent with the government's initiatives that they've set out on their agenda around industrialization. And that's looking at international trade opportunities, logistics, infrastructure, industrial goods manufacturing. And then the domestic consumption themes. So that's retailers, FMCG companies, domestic logistics, and the enabling services around that. And then urbanization. So there are great opportunities with good real estate companies and developers in Vietnam. There are also people looking at clean energy solutions and renewable energy and clean water. A number of those are in our portfolio, as well as banking, the finance of that urbanization. And then underpinning all of that is the banking as a theme or a sector in its own right. That's banks and financial services. And that probably gives a greater access to a broader part of the GDP story. So the portfolio we've built is concentrated, 64% in the top 10 that's shown here. Interestingly, Hoa Phat Group, one of our top players over the last 6 months of last year, was up over 90%. Vietnam Bank, VP Bank, and MB Bank, some of our banking stocks were up over 60% in the last 6 months of 2020. And Gemadep, which is a very large, fast-growing port player in Vietnam, was up over 80% in the last 6 months of 2020. So we've increased our allocation to banks. We've spoken about that at previous webinars, and that's played off very well so far. And we like each of those sectors, and we're looking for good compounding stories over the midterm in each of those categories. For the fiscal year, from 1st of July to today, year to date, the NAV, the net asset value per share for the fund, has performed reasonably well, 52%, outperforming the Vietnam index. And we're very pleased that the share price has also rallied in the last several weeks, and the discount between the share price and the net asset value has also narrowed. It's down to about 15%, whereas back around March through the COVID periods, it was much higher in the high 20s discount. So that's narrowed. Daily liquidity in the fund shares has also increased, and we're aware that a number of new investors that have joined the register, and they're all very welcome to journey with us on the next 5 years growth here in Vietnam. So I'll stop in terms of the presentation now, and I'm going to invite my colleagues Tin and Tan to join. And we're getting some questions coming in, but while we're doing that, Tin, I wonder if you'd just give us a little bit of a flavor from the Vietnamese perspective around the new Politburo and their plans for the 5 years, how people feel about that, and how realistic and relevant you think those plans are.
Thank you, Craig. The National Party Congress just concluded a long meeting in Hanoi earlier this month, where 1,600 delegates elected 200 Central Committee members, and the later vote for 18 Politburo members. The Politburo member will nominate candidates to be Prime Minister, President, and the Chair of National Assemblies, as well as other key positions for the cabinet. The candidate name will be officially released soon, and they will be voted during the National Assembly meeting in late March. The Congress focus on setting the social and economic development guideline for the next 10 years, 5 and 10 years, and the long-term planning to facilitate Vietnam to become high-income country by 2045. The delegate agree on the target on GDP growth rate between 6.5 to 7% over the period of 2021-2025. And in terms of GDP per capita by the year 2025, on purchasing power parity basis, Vietnam would be at the level of Malaysia in the year 2000, Thailand in the year of 2012, and China of the year 2013, rather. So Vietnam still in a very early stage of development, and therefore continue to offer significant catch-up potential in the next 5 years. What we are confident in the new cabinet, that they will continue the reform process, what we call đổi mới. It was adopted by the Party Congress by 35 years ago in 1986. They focus on now, I think, continue the SOE and administration reform. Number two, that they focus more on private sectors, both by creating favorable conditions for them to grow, and also encouraging the larger private holding to invest in technology and to expand to the global. And three is that they support the large high-tech and green FDI projects in Vietnam. And the fourth one, that they will accelerate the infrastructure investment, including the internet infrastructure. I just named few measures, but those will be the key drivers for Vietnam to grow to the next level in the next 5 years.
Thanks, Tin. Tan, yesterday was a bit of a global bond day. What's your view around the bond market in Vietnam, bond yields, but perhaps more importantly, earnings yield, and how the stock market is attractive on that basis?
Yeah, the bond market in Vietnam is a little bit different from the other global market. Actually, because it's not very developed. But I just want to update you that before the COVID, the health of the banking system and also the economy itself is quite good. So Vietnam entering the 2020 with a very good health and low interest rate, and more with the low interest rate environment globally, Vietnam is like in a very good position to push the economy. And compared to earning yield of the equity market, now the bond yield of Vietnam of 5-year Vietnam bond yield is just about 1.5%, which is even similar to the US market. And compared to the earning yield of the equity market is even up to 7 to 10%. So it's very attractive for equity investor.
Thanks, Dan. Tim, perhaps do you want to talk a little bit around kind of sector themes, particularly the bank and what's happening there, the banking sector, and also kind of stock selection?
Okay, as you see that Vietnam is still at the state of strong recovery, and a number of sectors that benefit from that recovery, including banks, construction material, infrastructure like logistics, and also the other sector in manufacturing. So just for example, banks, last year that very good year for bank, even the COVID-19. And this year, 2021, we still estimate that bank have a very good earning across the banking sector, between 20 to 25% earning per share growth. Some selective banks that in our portfolio even have higher, 30 to to even 40% per share growth. So that's the banks, that's one of the very good sectors that we also allocate the higher asset on that. The second one is that the real estate also benefit from the infrastructure development and also from the low rate, interest rate. That we believe this year they will be in a good recovery shape. Other sector like logistics, some companies also have very good earnings this year. So along that, we allocate our portfolio into banking, into construction material, and also in real estate and logistics.
Thanks, Tin. And Tan, do you want to give a color on the portfolio valuation and the EPS growth forecast?
Yeah, so stick to the strategy of reasonable valuation. Our portfolio now trading at the trailing PE of 11 times and forward PE of 9.5 times. In view of the EPS for the portfolio is around 20-25%.
Okay, and Tan, you just want to talk a little bit on the currency of Vietnam Dong, how its outlook is currently?
For the currency of Vietnam Dong, the currency has been quite stable for the last 5 years, even 5 years, and it also very stable in the last 1 year. And because of the stronger economy position of Vietnam, we have been talking about, global investors have been talking about the status of currency manipulator of Vietnam Dong. And the government, I think that the government have been doing a good job. And the trend in the short term is that I think that to have more balance with the US economy. In the short term, I believe that the currency will continue to be stable, even they can appreciate a little bit compared to the US dollar.
Great, thanks, Tan. There's a question here about, to play the opportunity, why not just buy an ETF? I'll answer that a little bit in the sense that many ETFs don't give you the full access to the Vietnam market. Historically, they've underperformed. Some of them are synthetic. They're not pure ETFs, although now there are some domestic ETFs around that. We think to be an active manager creates value. Part of our process is finding a concentrated portfolio of stocks that can compound over a long period of time, being somewhat index agnostic, but also through a strong engagement program, working with portfolio companies to help them journey better, particularly on the dimensions of ESG, environmental and social governance. And if you're purely allocating to an ETF, then you get the good, the bad, and the ugly, whereas we think there's value in selecting good companies, good compounding growth, and building a much more concentrated portfolio of businesses that we can really understand and get under the skin of, rather than buying an ETF. So that would be our recommendations: find an active manager rather than an ETF. There's a question here around Trans-Pacific Partnership, or TPP, or it's now the CTPP until they change it again, around Trump pulled out of that. I think Biden will want to come back in the same way that in the first day of his presidency wanted to rejoin the Paris Climate Accords and wants a trip to Glasgow in October to be part of the global move there. Likewise, I think he will look favorably on some of these global trade organizations. Clearly, he is going to still go after China and will want to use trade and tariffs around China, I suspect. Joining TPP makes a lot of sense. Vietnam has been a very open economy, a key part of many of these regional multilateral trade deals, and has benefited from it, as well as individual bilateral free trade agreements with countries. Vietnam was a key early part of what was the Trans-Pacific Partnership, and a key part of many of the other kind of subsequent projects that have developed since then. That openness has really helped its export base, and we've seen also recently many more companies looking to relocate to Vietnam to take advantage of the fact that Vietnam is a member of several of these clubs, and therefore it's another reason to locate to Vietnam. You've got access to abundant, relatively low-cost labor, you've got good infrastructure, you've got improving infrastructure, you've got good linkages. So these trade groups make a lot of sense. And also it's a double-edged sword, because the trade agreements, such as the EU Free Trade Agreement, also come with conditions for countries to improve their governance and the governance of their exporters and their adherence to good codes of behavior. So it's win-win. There are definitely gains from trade. And so we encourage that. There was a question just further on the currency manipulation charge, which I think Tan spoke to. It's gone a bit quiet. Last year, Vietnam was included amongst Singapore, Malaysia, Singapore, and several other countries accused of currency manipulation. And there was talk of some actions, and there was talk of some punitive action on the export of truck tires, which makes up less than 1% of Vietnam's export to the US. I think even that's been dropped. And so things have gone a little bit softly, because I think Vietnam is a key partner for the US, and the Biden administration want to find its feet in the East Asian Sea, or the Chinese refer to as the South China Sea. And Vietnam's a friendly party to have on your side of the table in that. So they'll tread gently around that. And there's another question around China and trade, the Belt and Road Initiative, and how could that impact the Vietnam economy? Tim, while you're thinking around that, I suppose an interesting point on the Belt and Road is quite how far-reaching it is. In Pakistan, in Sri Lanka, for a while in Myanmar, and probably again in Myanmar, the reaches of these initiatives doesn't really directly affect Vietnam any more or less than it affects the rest of Southeast Asia. Vietnam is a happy trading partner with China and receives a lot of goods that it processes. In terms of direct investment, for historical reasons, competitive reasons. So Vietnam isn't part of the One Belt, One Road initiative, whereas perhaps Laos, Myanmar, and then further west are. The very good question around COVID. Thanks for that, Nigel. Vietnam obviously did a fantastic job last year on COVID. I think in January, the new outbreaks, we've seen about 800, just over 800 outbreaks of new variants. The Vietnamese authorities have been very quick to shut it down, to put lockdown and quarantine on an isolated basis across some of the northern provinces. And for the last 2 weeks, there have been no outbreaks in Ho Chi Minh City, but in Hai Dung and some of the northern provinces there have been. Haven't been any further deaths, and the Vietnamese government and authorities are very much on top and in control. The good news also on COVID is Vietnam's just received, slightly ahead of schedule, first shipments of vaccines. They're going to go to frontline people and at-risk groups, and perhaps even in the northern areas that have suffered from these outbreaks. And then the authorities have a planned schedule over the next 12 to 18 months to get the majority of the population vaccinated. Perhaps unlike the UK and the US, where you're in lockdown and COVID is prevalent everywhere, you need to vaccinate your population to get people back to work. Vietnam's economy is back to work. So the vaccine program is to be preventative, but also to enable Vietnam to open up again its borders to international travel. But they've done a great job in terms of getting on top of that. There's a question on, perhaps Tan to answer, for this year around the growth expectations for the economy in Vietnam for 2021, and what about inflation?
Yeah, for the growth of Vietnam this year, we internally forecast about 6.5%. But some outsider even have a bigger number, 7.5%. Yeah, it may quite much depend on the pandemic. And we think that we have the upside risk here because of the vaccination is sooner than our expectation. For the inflation, even with the higher oil price, we could forecast that the inflation could continue to be below 4% for this year.
Okay, well, I think we're coming towards the end of our allotted time. I'd like to thank you all for joining and for your support of Vietnam Holding. And we look to continue to update you. Please visit the website, www.vietnamholding.com. Sign up for the monthly mailing list. We'll keep you updated through that. And we're very open. Please reach out to us if you have any questions. A recording of this webinar will be made and released probably on Monday, and a copy of the presentation. And that'll also be uploaded onto the website before Monday. So with that, we'd like to thank you again. Keep well and look forward to being in touch with many of you soon. All the very best.